Good day, everyone, and welcome to the webinar on Candy's post-tender reports for management. My name is Marjorie Roskrantz. I am a technical consultant here at the CCS office in Centurion, a city in the Gauteng province of South Africa. It is my pleasure to present this webinar to you. Today, I will be taking you through a few Candy reports that we thought would benefit project managers, the commercial team, as well as directors. The purpose of this webinar is to create a better awareness on Candy's ability to provide insightful, meaningful analytics with the required data integrity throughout the project lifecycle. We will, however, commence with the basics in order to ensure that everyone is of a fairly similar level of understanding prior to looking at the post-tender reports that we have compiled. Due to the large number of people logged into this webinar, we will not be able to answer any questions. However, please submit your questions during the session with the provided function on screen. At the end of the webinar, we will collect these questions and send the answers to everyone that registered for this webinar via email. Please note that this webinar will be recorded and you will receive a link to download it. There is a webinar once a month on various Candy topics. Should you not be able to attend the webinar at the given time frame, then please still register for it, as this will entitle you to receive a recorded copy of the webinar. Let's get started. Let's have a look at what we have on our agenda today. We're going to start off this webinar with an overview, where we will look at the CCS overview, the allowable analysis, the forecast analysis. We're going to look at key points under valuations in the subcontract manager. And then we're going to end this webinar with the cost and allowable analysis. This will be the first part of our webinar. The second part of the webinar, we will be looking at the post-tender reports that we have compiled for management. And the reports will come out of our estimating application, planning, forecasting, valuations in the subcontract manager, as well as cost and allowables. We will then end this webinar with an earned value graph. We're now going to look at the CCS overview. Our company, Construction Computer Software, better known as CCS, offers two software solutions to construction companies globally. That is Candy and BuildSmart. Candy is our estimating, planning, and project control system, where BuildSmart is our cost management and enterprise accounting system. We have the ability to integrate the two softwares, offering our clients a complete construction solution. We further allow clients the opportunity to manage the entire construction and engineering process from inception to completion by having one source of truth, enhanced cost management and value creation, accurate and appropriate information in real time, and proactive management. And that is what we call the complete solution. We're now going to continue by looking at our allowable analysis from engineered rates. During tender stage, Candy allows you to engineer your rates using job-specific resources. Each rate is uniquely priced using the list of resources. You are able to apply production outputs as well as waste, and that will then give you a calculated rate per bill item. Not only does the resource list allow us to generate a project allowable, but it further allows procurement to have 3 levels of allowable, and that is my resource unit rate, my wastage allowable, as well as the maximum buying quantity allowable. The benefit of using first principle pricing does not only give you the financial information of a project, but it also allows you to run detailed resource analysis reports, which we will be looking at later. We're now going to look at our forecast analysis by the bill and program. Candy allows you to link activities to your bill items to generate various forecast scenarios. We need to keep in mind, however, that for a successful integration, the below points will limit the benefit, however, it will not restrict the integration process. And that is having plug or split rates, having bill items with zero selling rates, in or items with no selling rates. And then lastly, we need to note that if you do not have any final quantities in place, your forecast will be based on bill quantity. One is able to link the bill to our program or vice versa on either a one-on-one relationship or one-to-many, and that will result in a dynamic link being established between our bill and the program. The result of linking the bill to a program allows us to look at various forecast scenarios. One of these scenarios is our BOQ with the budget forecast, and in this case, we have based it on the final net amount. Since we made use of first principle pricing, another benefit would be that we are able to forecast our resource usage. In this case, it's analyzed to a complex resource level. We will have more of these scenarios are available under the document manager, and it can be customized to the user specific needs. A dynamic link between the BOQ and the program is established upon linking the two. Therefore, any changes made to either your bill or your program will reflect on the forecast, and furthermore, you will be able to produce various forecast reports or documents. We're now going to have a look at our valuation and subcontract manager. There are key points we need to remember during the post-tender stage when it comes to valuation. And the first one is that we need to preserve our bid rates. The reason for this is because we want to produce reports where the allowable at tender stage can be compared to the reworked allowable and ultimately the allowable at completion. Then we want to remodel our base allowable to reflect what and how work will be carried out on site, resulting in a more accurate allowable. We then want to have coding in place, cost codes, and that is to summarize our resources, but then to also provide resource-based control for managing fixed resources, such as materials. We also want to have task codes in place, and this is to manage our time-related costs, such as plant and labor. We then want to have final quantities in place, because these are my remeasured bill quantities to produce accurate reporting. We also want to add and manage variation orders as well as my site instructions to give us an accurate resource allowable. If you want to enhance the degree of accuracy in the quantities and also speed up your measuring process, you can make use of the Q2O option, which is our on-screen quantity takeoff package. And then lastly, we want to have actual quantities in place, because our actual quantities are used for the cost and allowable analysis. Now we're going to have a look at the subcontract manager. The subcontract manager application is used at post-tender stage to manage the project subcontractors from appointment to final account. It contains multiple subcontract bills, which is created by using items from your main bill. We need to remember that one main bill item can be split amongst multiple subcontractors. And then we are also able to add our extras, contras, and inter-subcontract charges for each subcontractor, and then that will be included in the subcontractor's payment certificate. The use of valuations in the subcontract manager is crucial during post-tender stage, as the actual quantities recorded are used to produce resource analysis to date. You are able to run your interim payment certificates, and it also plays a vital role in the cost versus allowable analysis, and that is just to name a few. We're now going to move along to our cost and allowable analysis. The cost and allowable application is used to monitor the financial performance of a project. The prerequisites for the effective use of the cost and allowables are as follows. We need to have weekly or monthly valuation progress measure based on the actual quantities, but we also need to be aware that we need to have accurate actual quantity measure for the true reflection of the project performance to date. We then want to have final quantities in place, because the accurate final quantity measure is key for an accurate reflection of the remaining and at completion cost and allowables. We will then need real-time accounting cost. And the reason for this is because we want to compare our cost and allowables on the same timeline without the need of making any adjustments as a result of time misalignment. We can do this in two ways. We can do a direct cost import from Boltzmann, and this will allow for a cost import by cost code or by task code. We can also do a cost import from any other accounting package via an Excel import. However, this would result in a cost import by cost code only. And in this instance, there will be more than likely be a need for adjustments to the cost to allow for accruals and any time misalignment between the allowable release date and the close of cost date. Once the prerequisites are in place, we will be able to compare cost versus allowable to date, remaining, and at completion. We need to take note that what we see on screen is my cost versus allowable at a cost code level. We're now going to look at how Candy analyzes our cost versus allowables. For my to-date allowable, Candy analyzes the actual quantity and we multiply that by the net worksheet. For the cost to date, we then make use of our imported costs from accounts. In this case, we've made use of Boltzmann. As you can see on screen, we are analyzing our cost at a task code level, which is a much more detailed level of analyzing our costs. For our remaining allowable, Candy then analyzes the remaining quantity multiplied by the next net worksheet. And for the remaining cost, Candy analyzes the remaining quantity multiplied by the Candy cost worksheet. But what is a cost worksheet? Candy cost rates or worksheets are used to make adjustments to the remaining costs during the post-tender stage. You are able to make changes to either your resource cost rate, your production output, your wastage allowances, or even the construction method. Also note that this function is useful in forecast scenario planning. And then for at completion allowable, Candy analyzes our final quantity multiplied by the net worksheet. And for my at completion cost, we then take our to-date cost and we add it to our remaining costs. The cost and allowable application allow you to manage your project from more effectively by understanding where you are at any given time in terms of cost and the project allowable. This brings us to the end of the first part of the webinar. We're now going to look at the post-tender reports for management. We will start off with our estimating reports, and I will be switching over to Candy for that. As you can see, I've created jobs, and what we're going to look at today is my vent shaft and substation contract, valuation number 3. The reason why we're using valuation number 3 is to have effective cost and allowable analysis. The first report we will be looking at is our trade total display. This is an on-screen document. I've based my trade total display on my bill quantity as well as my net rate. You have the opportunity to either select your final quantities with your gross rates and selling rates. Your trade total display gives you a summary of your project allowable per resource type. I've also added the trade total graph as well as my resource graph, and this is to give us a graphical representation of where the bulk of the allowable is by either trade or type. You are able to print this report using the document printer, and this can then be shared with the client. We're now going to move on to the second report. For that, I'm going to go on to the report manager. As you can see on screen, I have 3 reports listed on screen. Please take note that these reports are already customized for the webinar purposes. However, we do have a list of standard reports available if you click on the new report option, and these reports can be customized to suit your needs. The first report we will be looking at is our Value Analysis 80-20 Rule of Thumb report. The analysis report identifies 20% of the bill items that contribute to 80% of the contract value. This report is used to identify the high value items. As we can see on screen, these are the top items that contribute to the highest value. My report was based on final quantity. The next report we will be looking at is our resource percentage report. Similar to my value analysis report that focuses on my key bill items, the resource percentage report identifies your key resources in a descending order per resource type. And this is to make it easy to highlight your high value resources. On the right-hand side, we have the utilization column, the rate and the amount column. The percentage type column represent the percentage contribution per type, and the percentage total column indicates the percentage contribution to the overall contract value. The last report under estimating we will be looking at is our wastage analysis report. Wastage is an allowable that is engineered into a worksheet. In BuildSmart, our accounting package, the Candy allowable is uploaded and procurement can see what the wastage allowances are for the relevant resources. On the right-hand side, the net quantity column is the total allowable including waste. The waste quantity column is the average percentage waste allowable. And my wastage column is the average waste quantity. For the waste amount column, we will then multiply the average waste by the rate to generate a waste allowable. This brings us to the end of our estimating reports. These reports that I have on screen come in handy when you want to manage not only your resources, but at the same time know and control your high valued items. We're now going to look at our planning reports. The first report under planning we will be looking at is our contractual program. The contractual program is as agreed between the client and the contractor. It consists of a fully calculated program and is based on the President's network. From this point onwards, you are able to control your project and also report the as-built program. If you want to have a high-level report, this report can then be rolled up to a level 2 to give you a summarized bar chart to give a bigger picture of the report without too much detail. The next report we will be looking at is our labor histogram, and this is based on the current staff. The labor histogram report is based on planning resources, and it illustrates the printing of separate histograms for selected resources. As you can see on my screen, I have selected unskilled labor, semi-skilled labor, as well as my skilled labor. These include both my daily values as bars as well as a cumulative curve. For our progress snapshot, the cause of delay, and the progress diagnosis, we need a program with progress on it. So what I'm going to do now is I'm going to switch over to another program. In order for me to do that, I click on my program manager, and I'm going to select my contractual program update number 3. My contractual program with progress snapshot. This is our contractual program and consists of 3 monthly updates. We have selected the option to show progress with snapshot, and this is to highlight activities that are either behind program, on program, or ahead of program. And how you would read this is by means of the jagged line. If this is my time now line, if it goes forward, it indicates that I'm ahead of program. If it goes backwards, it indicates that I'm ahead of program. So it is your snapshot, and it's by means of a jagged line. The next report we will be looking at is the cause of delay report. This report is used to highlight activities that are behind program and or overrunning the project end date. In order for you to run this report, you need to have a float range filter of -1. If you want to set this, you can set it under the selection tab when customizing the report. The last report under planning that we will be looking at is our program diagnosis. This report comes in handy as it can be understood by non-planners. The reason for this is because the numeric progress values are converted into textual information. This report is solely based on my base start date versus my current start date. It does not take into account any float. If you have a look at my external works, just to give you an example, although it tells me that I have a slip difference of -6, I have float of +109. That means that although I have slipped 6 days from my initial start date, this section is still not on the critical path. Planning reports come in handy for project status reporting, and we need to always keep in mind that the reports previewed can be customized to suit your specific project requirements. We're now going to have a look at our forecasting reports. As you can see here, I have selected my program with update number 3. So I'm going to switch back to my contractual program with no progress update. The very first report we will be looking at is our BOQ with the budget forecast. This report is my bill of quantities with a budget forecast. On the left-hand side of my report is all my bill items, and on the right-hand side is the projections. If we have a look at the very second item, I wanted to say very first item, item number B, excavate in bulk, we have a total net amount to be forecasted to the amount of 434,000. Our start and end dates are as per our program, so now we can see that the bulk of the work needs to take place in February and the remainder in March. The next report we'll be looking at is our BOQ with the client's budget forecast. This is a summary report. The previous report we looked at was based on net amounts. The current report we're looking at is based on selling final amounts, so that's why we're calling it the client's budget forecast. We have rolled this report up to a level 2, so it's to give the client high-level information of what to expect from the project start date to the project end date. We're now going to look at our activities with the budget forecast. The previous two reports was my bill of quantities with my projections. This report is my activities with my budget forecast. And this report comes in handy as it highlights my high value activities in each time period. Again, if you just want to look at an example, we have our fan foundation under section 2. For earthworks, we have a total amount that needs to be forecasted of 872,000, and we can see the bulk of the work is in February. And finally, we're going to look at the BOQ with your resource usage forecast. This report is my bill of quantities with the resource usage forecast. We also need to keep in mind that the quality of your resource usage forecast report will depend on the level of detail your bill of quantities was priced. On this report, we have analyzed our resources to a root complex level, and that is to focus on our key simple resources. This report identifies the resources per bill item, and it projects when and how much of that specific resource is required on site. And now we're going to look at our valuations and the subcontract manager reports. The very first report we will be looking at under valuations is the continuous valuation bill based on selling. With this report, our focus is on the claimed amount for my previous period, the month's claimed amount, as well as my claimed amount to date. You can customize this report to also add your previous claimed quantities, your month's claimed quantities, and as we can see on screen, we already have our claim to date quantities. This report serves as an interim payment certificate and can be submitted to the client. We're now going to have a look at our resource analysis by cost code. With the resource analysis report by cost code, we look at, we look at the list of our resources per each cost code. This report illustrates our total usage for each resource based on the valuation done to date. It therefore shows me what is my usage to date, what is my remaining usage, and what is my final usage per each resource. It is important that your valuation was done using your actual quantities, especially for internal reporting purposes. We're now going to look at our variation order financial summary. That is not a report, but we do have it under document. So I'm now going to go to my document manager. And I'm going to have a look at document 3.3, which is my variation orders financial summary. This document is used to analyze the valuation amounts per variation order, and it also highlights what VOs was approved versus what has not been approved. This document can be printed using the document printer, or rather the on-screen printer on the right-hand side, and you can use it for internal reporting purposes. And the reason why I'm saying for internal reporting purposes is because when we looked at our approved amount, it's based on my final net amount, actual net amount. We're now going to switch over to Subcontract Manager. And we're going to print our liability report, also known as the Subcontractor Summary Report. This report prints a summary of all subcontractors with our pay amount, due amount, as well as the liability amount. The liability amount will assist you with your cost report purposes. And then also we need to take note that these values can be directly imported into your cost report document. And finally, we are now going to look at our cost and allowable reports. The very first report we will be looking at is our cost report summary. Our cost report summary is a very high-level report, and it's based on our resource types. It indicates our allowable versus cost, date, remaining, and at completion. We need to take note of the negative values, as these highlight the areas of focus. The next report we will be looking at is my cost code summary. So unlike my previous report that is based on resource types, this report entails a lot more detail. This report is based on our cost code summary. Costs are analyzed to a cost code level, and this allows you to identify the cost codes which contributes to either the loss or profit that you make on the project. And it also allows you then to drill into those problem areas and make it your focus. We're now going to look at our cost/task code summary. Over and above the fact that we can analyze our cost at a cost code level, we can also take it a step further and analyze it by a task code level. So this allows you to drill into each cost code and identify which activities are contributing to either your profit or loss for that specific cost code. Thus, in summary, it allows you to focus on the problem areas in a lot more detail, giving you the opportunity to manage the cost and the allowable more effectively. So there's also an option in Candy that allows you to export your cost versus allowable data into an Excel spreadsheet cost report template where the data is then populated. This can then either be saved or printed for reporting purposes. In order for you to do that, you'll have to go to your document manager, open up document 1.1, which is my cost and allowable by period. Go to tools and then export cost codes to Excel. You need to have a cost report template. I've already selected mine. So if I click on OK, I am now able to have the same reports that we looked at on screen in Excel. That brings us to the end of the post-tender reports in Candy. In closing, what we have now is the earned value graph, and this comes out of your cost and allowable analysis. The graph on screen is an Excel version, but the same can be achieved under our cost and allowable application. So what we have here is the original base, time and money, which is then compared to our cost and allowable at a current point and time. You can run your schedule performance index by looking at your forecast versus the allowable to date. And then you can also run your cost performance index by comparing the allowable to date versus what your cost to date are. We need to take note that any changes or any variations or changes in scope will affect the cost and allowable at completion, as we can see over here. If you would like to have more details on the earned value analysis, then please do contact your local distributor. That brings us to the end of our webinar. Thank you for your time, and I trust that you have now a greater insight into Candy's post-tender reports that are suitable for management. Please remember to email your local CCS office if you want to know more about the Candy reports. We will keep you informed on the next webinar, and remember, if you are unable to join on a selected time, then please still register and you will receive the recording which you can then watch in your own time. Enjoy the rest of your day till the next webinar. Goodbye for now.